After a long time, it's going to be exciting times for Indian aviation. Two players, and I can't call both of them new players, but two players are going to hit the skies very soon. One is the Rakesh Jhunjhunwala-backed Akasa Air, which got its airline code recently, and of course Jet Airways, whose revival and second coming has been anticipated and awaited for a while. But the fact of the matter is that these two newbies are going to be entering the Indian aviation space at a time when it's tough going, not just for other well-entrenched domestic players, but across the world as well. The cost of ATF has been soaring consistently and shows no signs of abating or any relief over there. Pandemic fears may have eased off, but the fears of a recession in some parts of the world, growing inflation in India, could dampen demand. So what is the outlook looking like for the two new players? To speak on this, I'm joined today by Mark D. Martin, founder and CEO of Martin Consulting, Ajay Attorney, founder of livefromalounge.com, and Dheeraj Mathur, aviation expert. Welcome to all of you, and thank you so much for speaking with us today on the show. Mr. Mathur, let me begin with your overview. Definitely, it's exciting, and you know what's made the two new launches even more interesting is sort of the banter that they have been engaging in on social media, welcoming each other on Twitter and trying to increase interest among domestic users and new users, future passengers. Do you think that they will get a warm welcome in terms of people interested in trying out new services?
अभी तो पार्टी शुरू हुई है, as Jet said. Well, yeah, certainly, you know, if you look at the Indian aviation market, and this is something that we've all known, not from today, but for the last 10, 15 years, it's been amongst the fastest growing, and it continues to be amongst the fastest growing. And the good thing is that, you know, post COVID, the recovery has begun. I mean, for instance, in Feb this year, something like 77 lakh passengers flew. And that went up to over 1 crore domestic, 1 crore in March. And so there is, the market is growing. It's driven by the economy. That's a very strong correlation. The economy started picking up. There is that middle class, which is moving to traveling by air. And with various policy initiatives of the government, particularly the Regional Connectivity Scheme or RODAN, you know, there is a huge unmet demand that is yet to be addressed. And I think RCS or RODAN is just beginning to scratch the surface. I mean, just to get a perspective, you know, idea of potential numbers, I think something like, if you look at the number of passengers that travel by train, in FY21, which was a pandemic year, it was 1.3 billion. Pre-pandemic, 22 million passengers traveled by train daily. And if you look at the domestic air traffic, I mean, it's been, in 2017, it was, pre-pandemic, it was 158 million. So there, and we're looking at shifting some of the people who travel by train and can afford to and would prefer to travel by air, just that they don't have connectivity. So there is a huge unmet demand yet. And the issue has always been supply. Airbus projects that India is going to need another over 2,200 planes. I think our fleet strength right now is only 700 planes. So from all perspectives, there's a huge thrust on expanding airport infrastructure by the government. Already it's almost doubled, increased by over 50% in the last 5-7 years. So if you look at the entire ecosystem, if you look at the market, the passenger traffic, and I'm not even talking about international travel, just the domestic market itself is so huge that we have the potential for not just to maybe another 3 or 4 airlines to connect the whole country.
Now the question is, how do you navigate the market right now as a new player where you have a well-entrenched leader in Indigo. You have an Air India sort of trying to make a comeback under a new management, and they're figuring out what their new version will look like. And then many others who are just dealing with the current pressures of the aviation industry. So, Mark Mutton, what would your strategy be as an Akasa or as a Jet? Should Jet try and revive its earlier brand positioning as a premium product, or should it go low cost? Akasa has already said it's going to go the low cost way. So, will this be a competition now just purely on prices?
Tamanna, thanks for having me. I don't want to be the party pooper here, but let me make it very clear, at least where we are in terms of the overall situation vis-a-vis Jet Airways and Akasa. Now, Jet starts with a lot of uncertainty, starts with a tremendous amount of headwind. Let's not forget we are dealing with a Indigo, which is the largest fleet with the largest network. We're followed by a private Air India. It's not a government Air India. And we have an Air India with the Vistara, and then you got the Go Airs and the Fringe. So, the restart of Jet, I mean, I know it's nostalgic and everyone is excited about it, but it gets into severe, aggressive skies, severe headwinds, because also, let's be very clear, the COC, the company, the committee of creditors, which is Yes Bank, PNB, and SBI, I mean, they're very clear. The assets of Jet Airways have to be sold. They need to recover their money from it as per NCLT. So nothing is going to change from that. So it's good to see them come back, but they're going to have to beat a lot of odds to get back in the sky, deal with competition, win back the market, because you can't really buy back passengers and win back customers just by silly hand gestures. You're going to have to really get down and sell tickets. On Akasa, I think Akasa is we know very little of Akasa. I think once we gain more insights into the product, once they launch and their working models and revenue models, we'll probably know precisely what part or how aggressive of the market or which segment they want to really target or get into. I mean, from where we know is the 737 MAX is still not a stable aircraft. It's still reporting a lot of glitches and issues and emergency landings over in Europe. And, not long ago, about 45 days ago, SpiceJet reported an emergency landing as well. So a lot of uncertainty, but on the flip side, I'd probably say there is a aggressive pent-up demand for air travel. There is an aggressive need for air travel now because you've locked up and caged up people at home for the last 3 years. That resurgent market is going to really kickstart and boost everything for airlines and hotels and everybody around. We're also going to see a very interesting upward curve pushing the envelope for international travel. Destinations like Kuala Lumpur, Singapore, Bangkok, Phuket, all, wherever that Indians traveled in Asia is going to come up and take up focus. Akasa doesn't start as an international airline. They start as a domestic airline. They still need to slug it out for 3 to 5 years to prove and win their international license.
Yeah.
So it's an interesting start. It's good to see two more players. Well, one more player come in because Jet, left and regained regaining back its position. Eventually, in all of this, the winner is going to be the customer, the traveler, and I don't think we're going to see a sudden diametric shift of air travel going to rail, because let's be honest, eventually it's the traveler who has to pay for that extra delta price fuel hike.
Which is why I talked about, the economic situation right now and whether that's most conducive. But we don't know how long this war between Ukraine and Russia will last, or supply chain constraints will last. Meanwhile, life does go on. Now, Dheeraj Mathur said party to abhi shuru hui hai. Ajay, is the party for the airlines or for the industry or for the customer?
Hi, Tamanna, and hi, everyone on the panel. I think to answer your question, secondly, Tamanna, the party at this point of time, I believe, is for the airlines. Yes, on one side, they are facing, supply side pressures because the dollar is inching up every day and fuel is on an all-time high. But remember, on the other side, the Indian customer, just like the rest of the world, is getting used to paying higher ticket prices. Okay, so the Indian customer who was for example, used to paying 2.5, 3,000 rupees on a Mumbai-Delhi ticket is right now happily paying 6,000 rupees, 6,500 rupees on a 3 weeks out, 4 weeks out ticket, and on a next day ticket, 9,000, 10,000 rupees for the same ticket. So also the government has clearly made it very clear that this whole T plus 15-day pricing regulation is not going away till the government sees stability in the recovery of the Indian aviation market. So I think this is going to go on for a while. What that means is that any of these flash sales or anything that the entrenched players used to do, that will happen, but that will happen on a long dated basis. That can't happen like, hey, you can buy a ticket today and tomorrow get on a plane for 4,000 rupees or 3,000 rupees. So yeah, I believe the party at this point of time is for the airlines, because more than ever, all sorts of people are traveling. And unless there is another wave of COVID that hits, I think this party is going to continue, because people don't seem to be minding paying the high fares and navigating through crowded airports at this point of time to be able to travel. One thing I wanted to add in a counter to one of the things that Martin said earlier about the fact that there will be entrenched players already. I think the two people who are planning to get into the market, which is Akasa as well as Jet Airways, are already planning to differentiate themselves. Eventually, it's the ticket price that sells for the Indian customer, yes. But like we saw when Vistara came in, they brought in premium economy, and usually it was not a success on day one. But people now proactively want to buy premium economy on Vistara. So Akasa and Jet Airways are both planning to be slightly different than what is maybe 80-85% of the Indian market and however it is operated.
Ajay, what would be that differentiation? What would be that differentiation?
The differentiation could be anything. The differentiation could be, we don't know that differentiation right now. Akasa's Vinay Dubey has already talked about building an airline with warmth, I guess trying to take on, for instance, the clinical protocols of some of the bigger low-cost players. And Vistara is also trying to find its, Jet Airways is trying to find its niche in the market, I guess, with some sort of new digital age product that the CEO Sanjeev Kapoor mentioned recently. So the details are not out yet, but yeah, what we know is that the two players are thinking differently at this point of time, and they will probably not have exactly the same product as what the rest of the market's been offering.
You're going to have two players who are going to come to people with a slightly different proposition. And the other point that Ajay Attorney made, that people are willing now or getting used to paying a little bit more.
Yeah, I completely agree. And, I'm just talking from anecdotal
Question was for Mark. That question was for Mark, Mr. Mathur.
Oh, sorry.
But since you've started, sir, I'll let you finish and then I'll come to Mark. Yes, please, sir. Go ahead.
I'm sorry.
No issues.
Yeah. So as I was saying, just from an anecdotal perspective, since the pandemic restrictions were lifted by the government last year, I've made about 10 domestic flights or 12, including by business class, and on two occasions the business class was absolutely full and very expensive, but still full. And even the domestic routes, whether it was to Bhopal or to Goa or to Amritsar, everything was full. The whole aircraft there was not a single seat that was available. So, and the numbers showed, in March, the passenger traffic was 1 crore, over a crore. In February, it was less than about 77 lakhs. So passengers are willing to pay more to travel, definitely. And, Mark said something about people moving to trains. Actually, what I meant was the other way around. People who are traveling by train, and as we all know, getting train tickets is extremely difficult in India. Trains are almost inevitably full. So there's a lot of unmet demand for aviation that is presently being met by the railway transport, which is potentially likely to move. So definitely people have accepted the fact that prices have gone up and they are willing to pay more. Again, anecdotally, I'm presently in the United States and I've come here after 3 years. And I find that things have become far more expensive than what they were 3 years back. And yet, here as well, the malls are full, people are out there traveling by air and all that. So I think across the world, people have reconciled to the aftermath and the after effects of the pandemic. And people just probably feel that, life has to go on and they can't remain cooped up at home, in perpetuity.
So
I think people
the
will
YOLO
agree
effect
to pay more.
or the FOMO effect will help with travel as well. Mark, your views on that?
Well, Tamanna, post-COVID, we've seen insane, crazy new trends. I mean, we've seen the rise of business jets take over when commercial airlines didn't fly. I mean, we've heard about stories of families chartering a whole Airbus A320 and flying over to Jabalpur and Gwalior. So, when the chips are down, the Indian consumer will pay. But when the earnings are depressed, when inflation hits you, you are going to be cost conscious. But the what we're dealing with is also a sort of a push to the wall situation. You've locked up people for 2 years, and they're going to want to bring back normalcy in their lives, whether it's take the family out for dinner or fly over to Goa or take a holiday. If that costs you 5,000 extra per seat per head, you pay for it. If the hotel is 25% more expensive, you're going to put that money because you've been looking at that opportunity. I think the point I'm trying to say here is that the trend line post-COVID with not just our markets, but global markets is something that we've also seen very similar post-Asian economic crisis, 98, 99, 2000. I think we've seen a very similar resurgence in pent-up economic demand. And that is going to happen now. As regards to Vistara and Jet Airways, I'd probably say of the two, Jet Airways is a bit more poised because there is a tremendous amount of nostalgia for the brand. There's consumer recall. There will be a natural tilt, for somebody who's flown Jet Airways before, he's going to want to fly Jet Airways again. But coming on to Akasa, I'm not too sure. I mean, I'm sure they're going to be a great product, and they got so many guys there in management who want to drive the organization, and everybody wants to take it forward in all directions. But the real issue here is that it's a big, uncertain question mark of what is Akasa going to be. 737 MAX, still not stable. Issues with brand. What is the product offering going to be? And let's be honest, I know Ajay mentioned something very interesting, but I'm going to mention about Vistara, but I'll talk about AirAsia. When AirAsia started, I mean, it was everyone from SpiceJet to Indigo to Go Air dropped their fares by 40% and wanted to wipe AirAsia off the market. And it has been tough for AirAsia. So we are going to see aggressive, we are going to see the competition attack with the vengeance, because post-COVID, now the market's up for grabs. Now airlines need to win the consumer to themselves and lock him in for good. Yeah. And there's going to be a tremendous amount of competition here. It's interesting now. Yeah. So I think wait and watch for the next 3 months.
No, definitely an exciting space right now for Indian aviation, but we've been focusing on Jet and Akasa. The fact is that there is a lot going on in the aviation sector. Indigo will be getting a new bus. Air India still has to come into its own under new management. Ajay, do you think that the experience for the aviation sector and for the passenger is going to be very different, say 6 months to a year from now?
Tamanna, I wouldn't put a timeline to it, but I will expect that the experience will change. 2 factors or 3 factors will drive it. Okay. First, perhaps whatever Jet Airways will do will now set the course for what Vistara and Air India will want to do in the future. Purely because of the fact that people are tired of Air India. Air India has broken planes, dirty seats, all sorts of, it's messed up, okay? And the new CEO, who's, whenever he's joining, we don't have the exact date yet, he will need to bring in a team of experts to just design a new product for the airline. So Air India, I would imagine 3-4 years it'll take them to kind of get the the hard product fixed up. Vistara unfortunately dropped the ball during the pandemic. You've seen scores and scores of social media complaints against them, broken bags, dirty seats, all sorts of things. So in this phase of the market, when Jet comes back, and Jet is going to try and cash in on whatever was the existing brand equity that it had. And that is what makes me hopeful that Jet will be successful, because I know it will not have a network to talk of on day one. And a lot in Indian aviation is about the network,
Right.
obviously. So let's see how quickly they can ramp up.
One more aspect we should talk about in this show, because we focused on it a lot from the customer, passenger point of view. What about path to profitability? Can anyone hope for that, especially the two new players? Yes, Mark wants to take that.
Tamanna, I'm going to take that. So the dollar's up. That means all your spares are going to be more expensive.
Yes.
The cost of freight is up by 25%. The cost of oil is up. The government still hasn't come to a holistic ratification policy on taxes, on VAT, inclusion into GST. India produces quite a lot of jet fuel, and we export it and we import it back because that's our whole policy of foreign exchange earnings. But the bottom line is we're now getting in a scenario where there's going to be another pandemic wave. There is going to be things are going to get worse with Russia, Ukraine. They haven't really come to peace yet. It is going to have a tremendous impact on war risk insurance. Flying to Europe is going to be much more expensive. Now we're constantly pushing the consumer in the corner and asking him to pay for it eventually. Airlines are not going to take on that loss on their heads, because the last 3 years with aircraft being parked and grounded all over most parts of the world, India, wherever they've been parking airplanes, that has accumulated a tremendous amount of financial whammy. Now they can amortize that for the next 5 years, but starting now is when it's hardcore pasa vasool. They need to make their money. They need to focus on earnings. They need to fill up seats, and that filling up seats, is going to get the competition very aggressive.
Yes,
there are going to be a couple of bloodied noses here and there. There are going to be winners. There are going to be losers. There are going to be the guys who throw in the white flag. Okay,
let's see how this fight progresses. It's going to be interesting. Very quickly, Ajay, I have to wrap and I'm out of time, but very quickly.
Just want to add to what Martin said. I think I know about the bloody noses that he's talking about. Look, in the profitability perspective, don't expect the new players to be profitable immediately. Obviously, they have a lot of sunk cost, and give them 2-3 years before they come back. Remember, Indigo already eked out a profit last quarter, and though we are still to see the full year numbers, I think if you have to give anyone the benefit of doubt that they might be profitable, that would be Indigo in the current
we will have to end this now, and we'll have to come back, reconvene, and see who really made it out of this exciting airfare war, perhaps, which is to come. But for today, thank you so much to all of you for joining us on the show.
Thanks for having me, Tamanna. Thank you.
Thanks.